If you were keeping an eye on the markets, it was just a day of absolutely wild swings. Ended with what a lot of people are calling a truly historic rally in the U.S. stock market.
That's right. And the core of it all, the thing that really turned things around so dramatically was this announcement. It came from former President Trump talking about a temporary pause on some tariffs.
Exactly. So to really get a grip on what happened, we've been looking closely at excerpts from a CNN business article. It covered the day, as it was all happening.
Hmm.
And our mission here really in this deep dive is to figure out exactly what kicked off this huge market move. We want to look at the key reactions, the companies involved, and maybe touch on the uncertainties that were still kind of hanging around afterwards.
Right. So maybe start with the setup. What was the mood before the announcement? The article makes it clear the market was already pretty tense.
Oh, absolutely. On edge
Yeah.
is how the article put it. I think that captures it perfectly.
Yeah.
Wall Street investors were just hyper-focused on any word about Trump's trade policies. These punitive tariffs, as they called them, they'd been a real drag.
Yeah, a big source of anxiety. And then the signal came directly from Trump, right, on his platform, Truth Social.
Yep. He announced a 90-day pause,
Yeah.
said it was on most reciprocal tariffs.
Mm-hmm.
But, and this is really key, I think, you have to notice who wasn't included in that pause.
Right. China, specifically called out as not part of this 90-day thing. And that carve-out, well, it's pretty critical when you look at the bigger picture, the trade pressures that were still there.
Okay, so Trump puts this message out. It suggests, maybe tariffs are easing up a bit.
Yeah.
But the big one, China, is still fully in place. And what happened next? The market just exploded upwards.
Yeah, historic rally is what the article calls it. And honestly, the numbers back that up. The Dow Jones Industrial Average, I mean, the jump was just enormous.
We're talking, 2,963 points. That's a 7.87% surge in one day. That's the kind of move that grabs headlines, makes everyone sit up and take notice.
Definitely. And the S&P 500, which is, broader 500 large companies, that shot up 9.52%. Now, what's really striking and why historic fits, the article points out this was its best day since October 2008.
Wow, 2008.
Yeah, think about that context, the financial crisis.
Yeah.
So a day with that kind of positive move, it's really something. In fact, it was the S&P's third best day, going all the way back to 1957.
Just incredible. And the Nasdaq, the tech stock.
Oh, the Nasdaq really flew, soared 12.16%. The article mentions this was its best day since way back in January 2001, and the second best day in its entire history. I mean, these are just extraordinary numbers for the major indexes.
It really shows how much this whole tariff situation was weighing on investors, especially, it seems, in tech.
No question, tech's global supply chains are so complex, so sensitive to this stuff. And there's a quote in the article from Chris Brigatti at SWBC. He said, "The market's move upward is violent and speaks to how badly the market was looking for clarity on this issue."
Violent. That's a strong word, but it kind of captures that sudden surge, doesn't it? That pent-up
Yeah.
need for some kind of direction.
Exactly. The uncertainty was just killing sentiment. So this announcement, even though it left China out, it just offered this glimmer of hope, maybe, a sense of relief, like, okay, maybe the worst of the broader pressure is easing off.
And it wasn't just like a handful of big names pulling everything up. The article stressed how widespread this rally was.
Yeah, that's a good point. It said nearly every single company in the S&P 500 was up. That really paints a picture of just this collective exhale across the market.
And some of the individual stock moves were just jaw-dropping. You look at giants like Amazon, up almost 12%.
Yeah.
Nike, over 11%.
Yeah.
And the airlines, wow. United up 26%.
Yeah, United 26.14%, Delta 23.38%, American 22.6%. Airlines are super sensitive to trade stuff. It hits travel, fuel costs potentially. So any hint that trade tensions might ease up, that's huge for them. Explains those massive jumps.
Makes sense. And tech wasn't exactly sitting it out either, despite the China situation still looming. Apple up over 15%. Nvidia, that's a big one, almost 19%.
Palantir also 19%. Tesla saw a huge gain, 22.69%.
So was the thinking maybe that even with China tariffs staying, a pause elsewhere might ease pressure on component supply chains generally?
That seems like a plausible read, yeah. Tech relies so much on those global networks. Maybe the signal wasn't just about the specific tariffs pause, but about the overall trend. Perhaps a sign that things wouldn't just keep escalating indefinitely across the board. Some breathing room.
Right. But we need to keep this in perspective, don't we? Because the article does remind us, even after this monster rally, the market wasn't actually back to where it was before the latest round of tariff threats hit earlier that week.
That's such a crucial point. Yes, huge gains, fantastic day. But the S&P and Nasdaq were still technically down from where they closed on April 2nd. It shows just how hard that initial hit was when the tariff talk ramped up again. The rally didn't fully undo the damage.
And the article mentions the S&P had gotten pretty close to bear market territory, didn't it? Which is, a serious downturn.
Yeah, that 20% drop from a recent high, that's the technical definition.
Right.
And the fact the S&P was flirting with that level, down almost 20% from its February 19th peak, it just highlights how shaky things felt, how quickly the market could drop before Trump's announcement came.
So, okay, massive relief rally, but the core trade issues hadn't vanished. And that China piece, that remained a really big deal, right?
Oh, absolutely. The article is very clear on this. While some tariffs got paused, the trade fight with China actually got worse. Tariff rates on Chinese goods went up significantly. That really tempers the overall positive vibe.
Right, I saw that number. From 104% up to 125% on Chinese goods. That's a huge hike. A clear signal that, okay, pause for some, but full steam ahead, even escalating with China.
Exactly. And don't forget, the article mentions the other tariffs still in place. Those universal 10% duties on all imports, the specific ones on autos, they didn't go away. So you had this selective pause, but lots of major restrictions were still active.
It really paints a complex picture. You can see why analysts might remain cautious, even with the market jumping. There was that quote from Jamie Cox at Harris Financial Group. He said, "It's incredibly difficult it is to trade around his tariff regime because he and only he knows when it ends." That really captures the unpredictability of it all.
That unpredictability is poison for markets, isn't it? Investors hate it. So even with a temporary pause, if there's no clear long-term plan,
Mhm.
you're still vulnerable to the next tweet, the next announcement.
And speaking of announcements, Trump himself obviously commented on the market's reaction
Yeah.
in his signature style.
Indeed. The Truth Social posts. Be cool, and this is a great time to buy. That's pretty characteristic, that direct engagement with the market narrative.
And he apparently said publicly the markets were extremely good. The article even notes he was caught on a hot mic somewhere. Was it a NASCAR event?
Yeah, a NASCAR event
Right.
touting the market gains.
Right, which, probably added fuel to the fire, short term anyway.
Likely amplified the positive mood, yeah. But you have to ask, does it fix the underlying economic worries that the tariffs caused in the first place? Probably not on its own.
Now, stepping back for a second, the global reaction is interesting too, because before the U.S. markets went wild after the announcement, international markets earlier the day were actually having a pretty rough time with all this trade tension, weren't they?
That's right, yeah. The article walks through that. Global markets were mostly down, reacting negatively to China's retaliation, the EU countermeasures. Seeing that initial global dip really highlights how dramatic the U.S. turnaround was later.
So Japan's Nikkei closed down. Was it 4%? That's a big drop.
Yeah, 4%. Hong Kong's Hang Seng was only slightly up after getting hammered on Monday.
And South Korea's Kospi index, it was actually heading into a bear market.
It was, which prompted their government to step in with emergency support, specifically for the auto industry. They were feeling the tariff pain directly. Taiwan's markets were down sharply, too.
Europe wasn't immune either, initially.
Mm-hmm.
The STOXX 600, that broad European index.
Down 3.5%. And you saw significant drops in France, Germany, London, too.
The only outliers seemed to be Shanghai. It closed up slightly.
Yeah, Shanghai plus 1%. An interesting outlier. Could be domestic factors there or just a different local read on the global situation. Who knows?
But generally, the picture before Trump's pause announcement was global concern, widespread worry about trade wars escalating.
Exactly. And then you saw ripples in other markets, too, like commodity, oil, for instance.
Right. Oil prices had a bit of a ride, dropped first.
Yeah, dropped quite a bit initially. The fear was, trade war leads to global slowdown, maybe recession, less demand for oil. But then, after Trump's announcement, sentiment improved, and oil prices actually recovered and gained some ground.
Makes sense. And gold, the classic safe haven.
Gold did what gold often does in uncertain times. It rose. Up more than 3%, I think the article said, investors seeking safety.
But then there was that weird thing with U.S. Treasuries, wasn't there? The article called it curious. Usually in times of stress, people pile into safe government bonds, pushing yields down. But that wasn't happening.
Exactly. Treasury yields were actually rising. People were selling bonds, which is kind of the opposite of what you'd expect when the stock market's been volatile. It suggests maybe some unease even in the safe corners. Apparently, Trump himself was aware of this odd bond market activity.
And didn't Deutsche Bank have a take on that? Something about demand for U.S. assets.
Yeah, they suggested this bond sell-off might indicate weakening demand for U.S.-backed assets more broadly, which, if true, that's a potentially significant long-term thing to watch.
Hmm, lots of moving parts. The U.S. dollar index apparently recovered some losses too, after weakening for much of the year.
Yeah, another piece of the puzzle, it all just speaks to the level of churn and volatility in the system.
And the VIX index really showed that, didn't it? The fear gauge.
Oh, yeah. The VIX dropped sharply right after Trump's announcement. That makes sense. Jitters eased immediately. But you have to remember where it was earlier that same day.
Right. It had spiked above 50. That's really high.
Extremely high. That level above 50, you only really see that during major crises. The article mentions the COVID pandemic, the 2008-2009 financial crisis. Those are the only recent comparisons.
So the market was genuinely terrified earlier in the day before the announcement flipped the switch.
Absolutely terrified. It shows the level of fear that had built up. There's another quote from Susanna Streeter at Hargreaves Lansdowne. She talked about the U.S. and China being locked into a trade war without either likely to back down at the moment, making investors being extremely skittish and causing these big market fluctuations.
Skittish is maybe an understatement after seeing those VIX numbers. So wrapping this up then, Wednesday, April 9th, 2025. It really was just an incredibly dramatic day, driven almost entirely, it seems, by how the market read one announcement about a partial temporary tariff pause.
I think that's fair. A huge, fast rally directly tied to that Trump announcement about pausing some tariffs, but not the China ones. But, and it's a big but, you have to remember this all happened while the actual trade war with China was getting worse, tariffs were going up there, and there was still plenty of underlying worries about the global economy.
It just highlights again how incredibly sensitive everything is. These global financial systems reacting so strongly to signals about trade policy.
Which kind of leaves us with a final thought, maybe for our listeners to chew on. Just consider the sheer power we saw. One announcement triggers these massive, almost violent market swings. What does that level of volatility, reacting so strongly to something temporary, what does it tell us about maybe the underlying stability or lack thereof? How much confidence is really there? And are there other things going on beyond just tariffs that are making the system so reactive? Definitely gives you something to think about regarding the bigger picture and where things might head long term.